Hello friends, this is your host Rakesh Kumar again. In the previous video we had seen rounding top chart pattern, and as you know that with the chart pattern video we follow that with an example video where I will show you now the examples of the rounding top in the real market. Before we start, I just wanted to remind you that if you have not subscribed to our channel yet, then you can subscribe to it now and get the notifications of the latest video uploads. And if you find this video useful for you, please consider pressing the like button which is there below the video. Without wasting much of your time, I'll just go ahead with the examples. But before we begin, let us have a look at the risk disclaimer. It states that the futures, stocks and the options trading involve substantial amount of risk. Your capital is at risk, the losses can exceed the investment. The information is provided as is, and the user of the information assumes the entire risk of any use it may make or permit to be made. So let's get started. But for those who are watching the video and they have not seen the previous video, this is the example video for the rounding top pattern. There will be a quick recap of that rounding top pattern. The rounding top is a reversal pattern which is formed in an uptrend. It actually tells you that the bullish bias is now ending and the advance is going to end, and the price will now reverse and the downtrend will start. So first thing that we need for a rounding top to form is an uptrend, which is shown by these higher highs and higher lows. After making the last high, the price starts advancing without making any significant low or a reaction low, and it starts forming a top like an umbrella. In the form of this umbrella, the time taken almost for this advance is almost equal to the time taken for this decline, and after the decline to this previous low, the price breaks through below like this. And then after, when it goes for a retest, then you are supposed to open a sell trade. Okay, and there is no confirmation for measuring the target, that how to measure the targets of this pattern, but I will say that for the sake of simplicity, you can take the next level of support for the target, like this low is the next support for the price, and this is the next low, and this is the next low. So these can be your immediate three targets when the price starts decline. Okay, without wasting more time on this recap, we will quickly go to the first example. The first example that I'm going to tell you here is in CHF-JPY daily chart. Now you see the price was in a good uptrend. The first requirement of this pattern to form is an uptrend, the higher highs and the higher lows. Okay, not from here, but sorry, from here it was in an uptrend. So this was a low, then after we had this one as the next prominent low, and after that we had this higher low. After this, what we can see from the daily chart is that this was the prominent low. After this, there was no considerable low. This was a low, but it was not considerable because the price made another high after this. Okay, so what I want to tell you is that the uptrend exists. Okay, and after making this low, the price started advancing like an umbrella. If you can see, the price started advancing like as if it was an umbrella, and then it started decline steadily, and on the way it actually broke through the low, this last low here, and after a break it stayed below this for 3-4 days, actually not 3-4 days but a lot of days here, and then eventually came to retest it here. Now this retest here marks our entry. Now friends, from this example you can clearly make out that it is a very good idea to wait for the right opportunity, which is a retest of the break, to get a very good risk to reward ratio. After the break, if you would have opened a position here or somewhere here, then your stop loss would have been higher than this line. But now you have opened the position here, your stop loss is much closer and your targets are much larger. So you have a very good risk to reward ratio. So you will open position sell here, and your stop loss will be somewhere here, and your take profit will be the next low. In this case it was this one, of course not this one, sorry, this one, your first and after that, no, first was this one, sorry, and the second was this one. So you had these three targets, immediate targets. So it gives you a very good risk to reward ratio. I hope you got the point. The price is in an uptrend, then it makes a shape of an umbrella, then it breaks below the recent low, then it goes and retests this level. We sell here, we place a stop loss higher than this, and then we aim for the targets. It is easy peasy thing, very nice. The next example that I want to show you is the US dollar against the Japanese yen. You can say from here the price started an uptrend from 13th, 14th and 16th of March. This was a low, then the price made a higher low, then again the price made a higher low, and after this the price made this low here, and from here the price actually started making the shape of an umbrella. If you notice here, this one is the shape of an umbrella, and then there was a steady decline all the way up to this place. Then again it started a small incline and then eventually broke through this one. So you see that this low was broken finally at this candle, okay, at this candle at 103.78. It has broken through this. Now sometimes you can say it was a head and shoulder, some can say it was a cup and handle, but yes, it is also a part of a rounding top also. So here when it broke below, see, the price did not even come to 103.78 to give us an entry. So that is what I was trying to tell you in my previous video, that you may not get always an opportunity to catch it here, but it does not mean that you will open the position before a retest. Why I am telling this, I cannot stress it more, but why I am telling this, that a retest is important, because if you open a position without a retest, your position will not be good for you to carry. Because if you open a position here and the price starts going upwards, then you will be keeping a bag in your hand for a very long time. I mean, you will be carrying this position for a very long time. It may come back and it may not come back. It can keep going upwards also. So the idea is that you have to open a position here and keep a very small stop loss above this, so that even if the price goes high and your stop loss gets triggered, you don't lose more than 1% of your trade, sorry, of 1% of your account, because you are not going to risk more than 1% on any of your trade if you have to be a consistently profitable trader. So I hope you got the idea here, that rounding top forms like this. When it breaks below the previous low, then you have to wait for the retest. Of course, the pattern is confirmed after the break, after 3 candles after the breakdown are closed below this, the confirmed breakout is there. But a retest is also important, because when you retest this level as a new resistance, then only you are sure that there is now supply in this region and the prices are going to go down. I hope you got the idea, and with this I think we are finished with the examples. You can find more examples from your charts. You can send me the examples in my comment section, which is below the video. You can ask me questions. I will be very happy to answer those questions about this pattern. If you have any question for any of the patterns which we have discussed in the previous video, you can ask them. I'll be answering those questions in the coming videos. And before I finish this video, I wanted to remind you that please bear in mind that opening the trades are very easy. You have to just click from the mouse and the trade will be open. But my request to you is that you please learn the risk management, which is also known as the money management. I'll try and do some videos on the risk and money management. And the last bit of advice from me is that if you are going to open a trade, you put more less than 1% or 0.5 to 1% of your capital only at risk on a single trade. You don't put 5%, 10% in the expectation of 10 and 20% in return. And you do not open a position if you think that the risk to reward ratio is less than 3 times. You should not open the position, because you will get another opportunity. So wait for the right opportunity, don't just jump into the market. Okay, with this note, I will just end this video. I'll see you soon in the next video on some new chart pattern. Thank you very much for watching this video.